Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors. November 22nd, Wednesday, before Thanksgiving. So, some good news, bad news with costs and inflation in Thanksgiving. We're still about 20% up above 2019 or the last Thanksgiving pre-pandemic, when we saw liquidity pushed into the system to try to help with the pandemic ills. In terms of the good news, this year's the first year since 19 that we've had a reduction in costs for the average Thanksgiving meal. So I'll put a chart up here. You can see some are pretty steep the fall. You see turkey back down towards that 2020-ish type of cost. Nice to see some of these food costs coming down. Keep in mind, we might not think about it day to day, but the drop in gas and energy, a little bit of a drop in labor costs, a more efficient supply chain versus the pandemic years of 20, 21, 22, all go to dampening inflation. We know travel is down, airline tickets are down. Maybe not an awful lot, but they are down about 7-8% versus a year ago. Gas down. So we're seeing that in the bond market. A month ago, we were pressing 5% in the 10-year Treasury. And we use the 10-year Treasury as a benchmark, similar to the S&P 500 in equities. The 10-year Treasury today sits at 440. That's a pretty significant drop, and it reflects the thought that the Fed has gotten their arms around inflation. Is it going to disappear? No, but the acceleration is dampening. And if we can get back to that 2.5%, 3% annualized inflation, keep in mind the Fed target is 2. But if we can get back to that 2.5%, 3% on a steady run rate, which we are at now, it will enable the markets to gauge price activity. What's priced in? What has to be priced in versus inflation? So we've seen a big rip in November off the back of those lower rates. You know, we have the QQQ, NASDAQ 100 up 11% already. Obviously, some backing and filling from here would almost be expected. S&P very solid, even small and mid cap starting to get a bid. I know an awful lot of investors and traders have been calling for that small cap rally. Still haven't seen it yet versus the other indices. Maybe we will into December, which has traditionally been a spot where small caps have had a bit of a rally. But we're really keeping our eye on interest rates, because that is what's controlling much of the valuation across markets. So lower rates, weaker dollar. Some people don't like a weaker dollar. I like a weaker dollar. Gives a little bit of wind at the back of equities, both domestically and internationally. We're also keeping an eye on the international markets. We've seen a bid in the emerging markets ex-China. So we've seen Taiwan move. We've seen South Korea move. Those are nice holdings for us in our international portfolio. So enjoy Thanksgiving. Remember, half a day, 1 o'clock close for stocks on Friday, 2 o'clock close for bonds. Enjoy the weekend. We'll be back next Friday.